Hi, I'm Ken Frier, Chief Investment Officer of Atlas Capital Advisors. This video on private real estate investing is part of a series of papers and videos that we call Alternative Investment Reality Check. Commercial property has been a reasonably good investment asset. The long-term returns have been competitive. In addition, property is considered to be a real asset, which will keep pace with inflation over time. If you would like to have property in your investment portfolio, there's an easy way to do it and there's a hard way. The easy way is through a real estate investment trust or a REIT, which trades on a stock exchange. The hard way is to become a limited partner in a private real estate partnership. As this video will show, on average, when it comes to real estate investing, it just is not worth it to do it the hard way. This slide shows the primary reasons investors give to invest in private real estate partnerships. There's definitely a bigger opportunity set. More than 90% of property is privately owned. A private operator has more flexibility in property types and stages of development. There's a perception that illiquid assets offer higher returns than liquid assets. And there's also a perception that the correlation to other asset types is low and the volatility is low. Despite these perceived advantages, as we'll show, in fact, private real estate investment performance has not been very good. And also the perception that correlations and volatilities are low is an illusion. So this chart shows the historical returns of real estate investing as calculated by Cambridge Associates, an investment consulting firm that specializes in alternative investments. The returns of private real estate are in blue, while the REIT returns are shown in green. As you can see, for all trailing periods, the REIT returns have been higher than the returns of private real estate investing. There's lots of potential differences between private real estate investing and REITs. There could be differences in leverage, differences in geographies or property types. But the most important reason why the returns of private real estate investing have been lower are the fees. Looking at this chart, you can see that in the last 30 years, the returns of REITs have been 10% per year. Suppose a private real estate partnership generated gross returns of 10% per year, but then they applied a typical fee structure, 1.5% of assets, 20% of profits. If you applied that fee structure to the 10% per year return of REITs, the net return becomes 7.2%, so 2.8% of the gross return lost in fees. If that 2.8% per year difference is actually quite close to the gap between REIT returns and private real estate returns over the long term, as reported by Cambridge. Many private investors invest via funds of funds, and funds of funds capture another layer of fees. So as we calculate here, the net return would fall to 6% if the gross 10% was earned via fund of funds structure. Another reason given for private real estate investing is the perceived low volatility and low correlation to other asset classes. If we look at this chart, we see the trailing one-year returns for private real estate investing and for REITs. The reporting for private real estate is lagged, and there's some flexibility with regard to adjusting market values. And what we can see from the chart is that when REIT prices are falling, eventually private real estate values fall, but with a lag. When REITs recover, private real estate values recover, but with a lag. And also we could just see the private real estate line is much more smooth than the REIT line. So reporting is smooth. So there's a perception that correlations and volatility are low. But in fact, it's just an artifact of the way that private real estate is reported. In actual fact, investing in property is quite risky, at least as risky as investing in the stock market. So to sum up our video, relative to investing in private real estate, investing through REITs offers exposure to the same types of properties, but with a much lower fee burden and much greater liquidity, transparency, and flexibility. Anecdotally, you're sure to be able to find investors who have succeeded via private real estate, but for the most part, succeeding as a private investor requires organizational capabilities that are out of reach for most of us. So that's our summary of private real estate investing. Thank you for listening. If you'd like to find more articles about alternative investings or our investment outlook, please visit atlasca.com. Thank you.